Good morning, sir. I request our chairman, Ansrat Chugh, Valuation Standard Board, to please say few words, opening remarks, and opening the series on of this Valuation Standard Board.
Yeah, thank you, Preeti Ben, the vice chairperson of this uh, good committee which really have a inspiration or which have a many things for the benefit of the members, those who look forward their career in the valuation side. You see, like the emerging economy, so many good aspects. The business landscape is completely changing, and naturally, in the process, if we talk about how this committee can be instrumental in the development of the mind frame, best of the strength for the members. So, though naturally our vice chairperson Preeti and me, and along with the team, we thought of bringing out some series on every Sunday. So, with those kind of understanding, we have been first session is starting today. The series is called Valuation Manthan. This is the first episode. It will be every Sunday from 10 a.m. to 12. And today we have an expert on this subject, Abhishek Chauhanji, as a speaker of the day. He'll be touching upon the orientation, or we talk about the basic things like prospects as evaluation expert. You see, like we can witness the shift in the focus from the just increasing the company's share price to creating value. The value side, whatever is been looked at, you see, like if we talk about the shifting, earlier it used to be a top line, bottom line, so many lines in between. But now with the time moving towards to be a global economy, time has shifted to create the value. Realization that the share price increase is not the challenging in growing, emerging as a main goal in creating the value down to the business unit level. So with those kind of aspects or those kind of understanding, we have started this series. The series will be moderated by Astha Gulati. She is a young chartered accountant, and she shows the interest. Yes, she can participate and she can she can give back to this profession through this committee. So, Astha, welcome you also, because you will be taking all through 2 hours with the our strength of the members, the participants. With this initial remarks, I welcome each and every participants. The our committee secretary Sonali Das Haldar, she is the instrumental in bringing out all the facilities, and we have a tech support from the other people around us. I welcome each one of you, and hopefully the start of this very first session and going along for the many session every Sunday will be a great strength in the building the knowledge, and more so not limiting to the theoretical aspects whatsoever is written with, but with the practical approach. Because now you see, like whether it is the IPO coming in, whether it is the valuation for the purpose of the balance sheet, or the if we talk about valuation for the merger and acquisition, and going forward many technical aspects also. Now it is the financial and the assets which are related with us, but going forward it will be looked at plant and machinery valuation also, land and building valuation also, once standards are being framed out by the ICI on that also. Institute has already been as far as the many standards has already been brought in. Many are in the discussions, which going forward will be finding out a place in the system for the benefit of the members. So welcome you all. Now I'll request Preeti Savla, who happens to be a vice chairperson of this very important committee. She has really been kind enough to really give a best of the thought to bring out best in the system. I'll request Preeti for her words of wisdom for the members, and going forward how this will be taken forward in the time to come. Preeti, over to you.
Thank you very much. Very respected chairman and the Central Council member, C.A. Hansraj Chugji, under whose wisdom we have started this, initiated this Valuation Manthan series. And today we are starting with part one and inaugurating this series. And we have under Hansraj Bhai's chairmanship, we have jotted down our large action plan for the year, in which we are evaluating the international valuation standards and how our standards of ICI valuation standards we are bringing out. We have various standards, but then also we are thinking, let us also have the standards on plant and machinery, as Sir has said. We are also bringing out with all those standards. Friends, we are also interacting with the IBBI and various regulators in valuation arena, so that what best we can bring out to our members, that is what we feel, and the best practices in valuations. It is our endeavor to serve the best to the members of our institute and the valuers also. And for that, this series has been started. We are in physical form also. We are starting up with various programs in different parts of country. It is our endeavor to see that the whatever the new things are coming up, whatever issues are coming up, valuation, those are deliberated, and new things and the latest updates are given, and these issues are sorted out, and members can do well in valuation arena. And hence the regulators part, the members part, even will be starting valuation examination. If people are willing to give, our members are willing to give, if they have any issues, please feel free to let us understand, so that we can also do in that arena. So this time, the today's series will starting, which will be the knowledge will be shared by Sri Abhishek Chauhan, who has readily agreed, and other all next Saturday, Sundays. We want you to be part of us, a valuable audience. All you give your feedback also and suggestions also, so that we can do well. It is for all of you that the knowledge is served and issues are resolved. The Astha, she has agreed readily for moderating this. And what I can say about Sonalita Saldar, she is doing extremely well for bringing out all the agendas of Valuation Standard Board. So with these words and opening remarks, under the chairmanship of C. Hansraj Chugh, let us begin this series. And please, I request all of you to please give your suggestions, so that we can do well to serve all of you the best. Thank you very much, and over to Astha.
Thank you, ma'am. Thank you, Chairman Sir, Hansra Sir, and thank you, Preeti ma'am, for your kind words and the beginning of this series. So now I introduce CA Abhishek Sir, a qualified chartered accountant and a professional teacher who is having 11 years experience of teaching to CA final students as well as CA members. He had delivered many of students on behalf of ICI, CAG, and other corporates on the wide range of topics, which includes India's valuations and finance. A teacher is known by the results of his students. Mr. Chauhan is an expert faculty for Register Valuer exam, having experience of more than 680 qualified register valuers, including all India toppers. More than 500 chartered accountants are his students working in different areas across the globe. He is always committed to help members to achieve their goals by always being their companion. So, welcome, sir.
Thank you so much, Astha. Thank you so much, Hansraj sir, Preeti ma'am, for such a kind words. I hope my voice and video is visible properly at your end. And it is indeed my pleasure to interact with the members of the institute for this particular valuation course. And this, I first congratulate this committee to first of all bringing up this issue, because most of the members of the institute and other members also, they are facing a great difficulty when it comes to the valuation thing, right? So, and it is my pleasure to indeed start this whole journey, क्योंकि जहां से शुरुआत होती है वो अंत obviously अच्छा ही होगा. But now I request before I should start my session technically, sir. I just want to inquire one thing. Will the support, if I want to share some data with the members right away and I want to communicate through a chat box, will that be possible for me or not during this session? I can share another question.
Yeah, it is possible. A screen you want to show, or how do you want?
No, I just want to ask some questions because I first know the target audience, what kind of members who are sitting in front of me, so that accordingly I can give the worth for their time. And let's suppose the members who are already totally new, then I should start accordingly. If the members have already done their trainings, most of the members, then accordingly I will deliberate my sessions, sir. So I just want to ask one of the questions over here, if possible.
No, no,
Just
it will be on the chat through chat only. It will be not live as such. It
I
will
have,
be.
if all the members or even you, sir, if you can see one of the link I have shared here, and against that link, if you open that link in your mobile, just clicking that or laptop, whatsoever, there would be a question that will be displayed in front of you. If possible, then all the members, I request all the members.
Everyone has to respond to this so that you'll be able to understand the answers.
Correct. Both the maximum members who can give me the
You
answer.
can actually put the question on the screen. What is the question?
By clicking,
So share the screen. Right now, you're not shared any screen. It is not visible. It is only on the chat what you have said.
Just a second. This is the first question that I want to ask. There are two questions only, not many, so that accordingly I can make my session more fruitful to the members. This is the first question. Hopefully, this is visible to the members.
Now the screen is visible.
Sir, yes, screen will be visible, but the members will not be able to answer you.
This will not be possible.
No, that system will not be possible. And the members
Chat.
are all chartered accountants, so
Okay.
you can deliberate accordingly.
Sure. I'll do this. No problem.
But it is not possible. Like members can give the answer through chat. They can reply, but it will not be coming to you directly. So that will be a time lag. It will be a problem.
No. If they will click on this link that I have shared, then everything will be
But
visible.
sir,
I
all
don't
are
think that
chartered
will be possible.
accountants. Sir, all are having the
Then
basic knowledge of these things.
leave everything apart and let's now start with the discussions straight away. That when it comes to the term valuation, right? So this is not a very new term. This is a very old term. And recent days, the importance of valuation has increased a lot. First of all, let me tell you why this has increased a lot. Recent example is the Adani share prices. All of your most of the members of all the chartered accountants must be investing in that. The price from 4,000 fell down to 1,300. Then again, it has risen up to 2,100. Right now, it will be somewhere around 1,700. Right. So 4,000, then 1,300, then 1,700, 2,100, and where it will go. This type of situations are always troubling each and every investor in this world. When we have to go for bank audits, most of the members who are sitting even today here must be looking forward for starting of their bank audits, right? And in the bank audits, each kind of loan that you have to check, basically, right? The business loans, if I have to be specific, in business loans, you will always see the valuation of maybe inventory, maybe the business, maybe the startups, maybe their equity, maybe other kind of assets, right? And valuation, if required and based on that valuation only, that particular borrowings or those particular loans are always approved. And recent times, there are many, I should not say this, but there are many frauds that have shook the country, right? In a very vast way. And we have to be very careful about what kind of valuations we are giving to the members, right? Whether the valuation is important, answer is yes. A simple business who is having, let's suppose, only on pen paper, some vision they're having, based on that vision also, sometimes you have to give your valuation report. Earlier, the chartered accountants, company secretaries, CMAs, mostly the chartered accountants were giving the valuation reports on different matters, right? But being the vast and diversified areas the chartered accountant has to work, he has to look forward for income tax, he has to look forward for GST, he has to look forward for Companies Act regulations, and many others. It was not, the reports standards were not there, the quality reports were not there. And obviously, if the quality reports will not be there, if the quality work valuation reports will not be there, then the requirement of a separate profession or requirement of the persons who will be specialized in these kind of professions, that was the need of the hour. And due to this, in the Companies Act 2013, they have introduced, or they have came up with a point, or they have came up with the issue that we must try to indulge this profession or this valuations as a separate profession, right? So 2013, when the company that 2013 was introduced, 1956 was this kind of provisions they have introduced under chapter 17 or section 247, right? And increasing day by day after 2013, the provisions of different inculcated over there, but in India after 2015, the Ind ASs were also introduced. Ind ASs, the standard for accounting, basically, right? Financial reporting standard, have introduced in India. The introduction of Ind ASs, the major two changes were brought into India. And what are those two changes? The number one change they have brought in is the substance over form, right? They should not be rule based. You have to see the, you have to make your accounting entries. Second thing, sorry.
Sir, your audio is not clear.
Audio is fine or not, ma'am? Okay. Since how long, ma'am? Okay. So I now it's like, can I start, sir, ma'am? Okay. So I was saying that when the Ind ASs were introduced, the major two changes due to some audio interruption, I'm just repeating. There were two changes majorly brought into this era. One point was you are going to look forward not for rule-based accounting, but substance over form kind of thing, right? You have to look forward to the intent of the transactions, number one. And the second most important thing that have been changed during the introduction of, after the introduction of Ind ASs, earlier, all the accountings were totally done as per the historical cost concepts, right? The totally new standards, the totally new perceptions have been introduced in the accounting also, and that should be fair valuations, right? Fair valuations. What should be the genuine valuation of a particular thing, right? So then the requirement of each profession is increasing a lot due to the introduction of Ind ASs and due to introduction of the valuation or registered valuer in Companies Act, right? 18th of October 2017, the new rules have been introduced. RV rules, as we say, under chapter 17 or 247. The new rules on applicable date is 18th of October 2017. They have introduced, right? And with the introduction of that, the profession started growing, right? And by now, if since morning I should tell you, there are 2209 members under RV SFA already have qualified this particular course and registered on the website of IBBA, right? So I am going to brief you out. I know you all are chartered accountants. You must have done the basic research about this course. Some of you might have already completed the 50 hours trainings. Some of you might not have done, but I'll take only 10 minutes most probably to brief you out about the entire structure of the course first, right? So for those members, those young aspirants, or the members who are new to this course, who have just heard from the colleagues and all, that yes, this type of course is going on, and let me tell you in the very advance that I am going through with this course as a faculty when this course was there, when there was only, I think, maybe not more than 100 or 150 members, right? At that point of time, this course was totally different. Now this course, the importance, the what you can say, the level of toughness and everything is increased a lot, but still there are many misconceptions also. And I must tell you that institute is doing a real great job that is definitely going to help all of you during this journey of passing this exam, as well as after passing, to be a good professional and do the valuations with a great quality, right? So first thing that I'm going to start with after this basic introduction of why valuations are so important and under which kind of area. There are two basic areas that I have discussed upon. Number one, many requirements under Companies Act where only the registered valuers, the value you have to need is required, right? Secondly, under the indices, the valuations are required. And to bring the quality under this profession, this are the valuations basically, because most of the financial transactions in the banks or otherwise are dependent upon the valuations. On the lighter side, you must have seen the recent show that was on air in the last year, I think, the Shark Tank, right? In that Shark Tank also, you must have seen many members that were criticized, many like the persons who were investors over there, right? The business owners, they were saying that please don't listen to the chartered accountants, right? These type of derogatory remarks are also made on this profession, that because sometimes there is a business who is only doing some
Mr. Abhishek, what I would interrupt over here, and you need not say all these things. You chartered accountants don't do all these things. Please, why you are saying all these things? Please do not share also such things. My humble request to you. Please.
So sorry, ma'am, if that is happening, but I'm coming to that point only because
No, but you should not say all these things. Okay.
Let me complete, ma'am. I'll not. There is no. I'm a chartered accountant also. I'm not saying that, but they
So
were
let
saying
us not
that is
discuss
what
this
I'm
thing. You continue your lecture, but let us not discuss on this now.
okay. So this particular profession that already chartered accountants are doing great in this, and even nowadays the most of the registered valuer under the SFAs, around 60-70% are registered valuers are also the chartered accountants. And with respect to the valuation is always a subjective matter, right? First of all, let me tell you very clearly, valuation, when you ask for a person to do a valuation, the same kind of valuations or same kind of business can be valued on very different markings, right? One valuation by one valuer can be marked for 10 million, also $10 million valuation. The other valuer can value that for 1 million also, right? And there is a huge difference in these two valuations, or even the difference can be much more than that, right? And that is why the particular standardization is required, right? Particular standardization is required, and for that standardization purpose, this valuation standards or this profession actually brought in, right? So now I just want to start with the first point or first technical point of the discussion, that how to pursue this particular course, because this is the first session, so I have to discuss with you all. This is the first thing, that how we have to pursue this particular course. Number one, who is eligible, right? If we are eligible, how much time we have to invest, how much money we have to invest, right? How much effort do we need to will be required to pass this exam, and what would be the materials, what would be the coverage, how the valuations are going to be done, right? So number one, first of all, there are three kind of valuations, and the institute for this, who is conducting all these things, let me right away clear this thing to you. Number one, right now, there is this body, Insolvency and Bankruptcy Board of India, right? Who is conducting or who is giving the certification for becoming a registered valuers and insolvency professionals, right? So today I'm not touching upon the insolvency professional. I'm going to discuss upon about the registered valuer course that is conducted by IBBI, right? The valuers, before starting, the valuers bill is also under pipeline. Once the valuers will be passed, maybe in this year, maybe in the upcoming year, then this body will be taken over by the NIV, National Institute of Valuers. Just like the three professional bodies we are already having, the Institute of Chartered Accountants of India, the ICMAI and ICSI, or ICMAI is also known as ICI these days. Just like on a similar note, there will be a National Institute of Valuers, the body responsible for taking over this profession entirely, right? But at this point of time, the IBBI is the whole sole body for this exam, as well as giving the certification for the members to become a registered valuer, right? Under the RV course, there are three kind of certifications are always given, right? Number one is for plant and machinery, right? Then there is land and building. For plant and machinery and the land and buildings, we chartered accountants, if I have to be specific about the chartered accountants, we are not authorized or we are not supposed to cover these kind of valuations. But then there is the third kind of valuation. This is called SFA, securities and financial assets, right? And the who is the obviously the well-known person for the financial aspects when there are financial aspects to be covered? Obviously, the chartered accountants or the company secretaries or the ICMAI persons, right? They are the financial experts and they are authorized or they are supposed to cover this particular profession. And under this, there are very lesser valuers under this land and building and plant and machinery these days. Even there are more than 2,200 valuers, registered valuers already under this SFA course, right? So the chartered accountants, the company secretaries, after having a 3 years of post qualification experience, right? Or even the MBA finance, after their 3 years of experience, they are eligible to go for this particular exam, right? But how we have to proceed with it, right? So where we have to contact, what we have to do to pursue this particular exam, right? So now IBBI have came up with the provision that there before conducting of this exam, first step is to complete 50 hours training. Complete 50 hours training, right? So who will conduct this 50 hours training? How we are going to enroll with for that and all? This 50 hours training can be conducted by any registered valuer organization, RVO, right? RVO licenses are given by the IBBI, obviously. In a simple terms, right? If IBBI is a university, RVOs are the colleges, right? Where you have to, the university will give you the degree, but the studies and everything you have to do with the college, right? And the RVO is just like the college for in that context, right? So when this comes to the RVO, ICAI RVO is also there, one of the RVOs, registered valuer organization, with whom you can complete your trainings. There are some other RVOs also. There are 15 to 16 RVOs these days who are imparting these kind of trainings, right? Including one of the three major institutes have all the RVOs, the ICSI, the ICMI, the respective member of the institute can do their trainings with that RVO, right? So institute's RVO name is ICAI RVO. You can easily Google it upon and you get the information about the batches. Even on the institute's website, you can get information about the RVO upcoming batches, right? So in those batches, you will basically complete the 50 hours training. Before the COVID period, this training was done physical mode also. After the COVID, there are very lesser batches. I'm not aware, even the Preeti ma'am or Hansraj sir can clarify me on this, that whether there are physical batches also or not. But yes, On the virtual mode, there are batches regularly keep on going, right? So this training, first of all, you have to complete with the RVO, right? And once you are done with this 50 hours training, if obviously it will be virtual mode or physical mode, it will be normally a 6 days training with 8 hours a day, right? And in that particular training, the respective materials, respective syllabus coverage is entirely done by different faculties most of the time, respective the specialized persons for different topics. Because one topic, one point that must be in the mind, that's what that we can say that kind of misconception also. That's what we have to cover. Is it only related to finance, right? The first misconception about this kind of scenario is this only finance? So I must tell you no, right? Whether only the financial transactions or the finance or SFM or the MAFA and all those kind of subjects the person have studied during his chartered accountancy, whether he will be only able to qualify this exam and he is only good or he is the fit person for this exam, the answer is a straightforward no, right? This is not the right thing. The second thing, then who is the person, sir, who can go for this exam? This exam is made after this, that you have to appear the 50 hours training. Based on that, you have to appear for the exam, right? So that exam is a 100 marks exam with 60 marks is the pass criteria, right? 60 marks is the passing criteria. And out of that, 0.25 marks is a negative marking. 0.25 marks for obviously 0.25% I should say, because there are 2 marks question also. In that, the 0.50 will be the negative marking. So 0.25% of marks will be awarded as negative marks for a wrong answer, right? Out of that, in this particular exam, out of this 100 marks that you have to appear, after completion of your training with any of the RVO, you will be eligible for this exam, right? And for appearing for this exam, what I can say, outsourced body, that is NISM, is there. After completing this training with the RVO, you have to register yourself on this website for exam centers, right? And earlier, when the COVID period was there, the centers were not, you were not getting the dates for the exam that easily. But now these dates are easily available with any of the exam centers near you. Even the small cities, the NISM centers are always there. You can go there and you can appear for your exam after taking a particular date, right? Now, the exam comprises of 100 marks. Out of that, there is a vast coverage for theoretical topics also, for practical topics also. But 26 marks of case studies are there, right? Case studies as a prima facie are always considered as practical questions. Most of the time, most of the members will perceive it as that if the case study is there, that would be a practical question, right? Obviously, case studies carry 2 marks per question. So there will be around obviously 13 questions or total, 2 marks each. So it will be 26 marks. But most of the time it is perceived that yes, if the case study is there, it should be a practical question. Initially, in the earlier years in 2020, 2021, that was the case also, because in these case studies, the questions are asked only practical kind of questions, the calculative kind of questions, right? But as the time changed, the situation or the course becomes a little bit tough, right? And then they have introduced in these case studies also the questions based on theoretical kind of understanding also. What kind of questions, sir? Based on Ind-AS based case studies, right? So in these kind of situation, how you should take up the value. In this kind of valuation, how under Ind-AS 113 you have to take up the value, right? So that kind of theoretical questions are also sometimes asked as case studies. You have to be very clear that yes, there are 26 marks of 2 marks each, but in these 2 marks also, there can be practicals, there can be theoretical questions also, right? but these are 2 marks questions. Then other, obviously 74 marks are 1 mark questions each. In this, I'll share, I'll request Sonali that I'll share the entire syllabus also with you, so that can be shared with the other members also after that. But in quick way, because the time is limited, in quick way, what are the major theoretical as well as the practical topics that you have to cover, or you should be having the knowledge of those topics to complete this exam or pass this exam easily. Number one is you have to cover the options valuations, right? The different type of options are valued, the futures are valued, that is required, right? Fixed income security valuations are there, equity valuations are there, business valuations are there, merger and acquisition valuations are there. These are the major practical kind of concepts. Now let's cover the theoretical aspects. The macroeconomics you have to cover, the Transfer of Properties Act you have to cover, right? The Stamp Act, Indian Stamp Act 1899 you have to cover. The Companies Act, winding up provisions, the chapter 17 or section 247, wherever the valuations are required, those should be covered. RBI regulations, wherever the valuations are required, those should be covered. SEBI regulations, prohibition of insider trading, substantial acquisitions and all, LODR, all those kind of is the majority of the provisions. And there are under India's intangible asset valuations are there, and some small topics like case studies and all are there, but those only cover 1 mark, so I'll not put much stress on that, right? But yes, these type of major points are covered or going to be covered in
Yeah, hello, sir. की voice actually clear नहीं है.
now I'm audible, ma'am.
Yes, sir. Now you're audible.
So I was saying that when a genuine person who is going to pursue this course, when a person asks me that, sir, can you tell me that out of this 100 marks, how much will be the practical kind of topics coverage and how much will be the theoretical kind of topics coverage, and why most the chartered accountants are worried about this point or worried about this question, is because we as the chartered accountants are most of the time are good with the practical kind of things like numbers and all. We are very good at numbers generally, right? I'm not saying this as a whole profession, but yes, most of the time, as a perception is there, as the company secretary members are most of the times very good with the theoretical terminologies or theoretical things. We as the chartered accountants are most of the times are very good with the practical kind of questions, right? So we should be very aware of that if we are going to pursue this profession, how much percentage will be the practical kind of thing. So exact, there is no number, but as per my experience, if I have to tell you, first of all, approximately 45 to sometimes 65 marks questions are basically kind of questions which are based on practical kind of calculations, right? Even 1 marks or 2 marks that are based on the logics, not the cramming, right? The other some theoretical marks or maybe the other parts are there which need some time of, sometimes the, I'll not say exact cramming, but yes, if there are some sections, if there are some provisions with respect to any law, that has to be remembered. There is no shortcut, there is no logic with respect to the practical FCF evaluation. If you understood the valuations, right? Then you can do any kind of problem. You can solve any kind of situation, right? But with respect to theory topic, that is not the case. You have to cover, you have to remember those points. But yes, if you want to ask me a question that how many percentage of theoretical as well as practical will be there, so approximately 45 to 65 marks will be there, which will be kind of practical topics, and in which as a chartered accountant you can feel very much comfortable, right? So in this particular exam, there are small terms that I should tell you quickly, right? What will be the fees for one attempt, sir? The fees is 5,000 plus GST. When we can appear? Anytime, whenever you have the time, whenever you are fully prepared with the course content, with the topics, with the knowledge that is required to pass the exam. If you're well equipped with that, you can go on the NISM website and you can take the date and you can give the attempt. In a particular day, there are 4 time slots starting from 9:30 in the morning and ending at 5:30 in the evening, right? So any of the duration of the exam will be 2 hours. So any 2 hours duration, out of 4 slots, any slot you can take and you can give the exam, right? But after a single attempt, earlier you can, even a single day you can give the exam for 4 times, but now that is not the case. After every single attempt, there is a cooling period of 2 months. Right? There's a cooling period of 2 months that if you appeared for once, this change was brought after 6th of September 2022. Before 6th of September 2022, it was allowed that any number of attempts by the members can be given after paying the fees, right? Now the fees is you have to pay obviously for a single attempt, but after every attempt there will be, you have to wait for 2 odd months for giving your next attempt. And this will obviously a great factor to think of, that yes, if we are 100% prepared enough, right, then only we should give the exam. Earlier the situations were there that yes, members keep on giving the exam. This is not the case right now, right? So this is about the first, you have to complete quickly the 50 hours training. Then you have to go for the NSM registration for giving your exam. You have to prepare well for your exam, in which the 26 mark case studies, 74 marks are the 1 mark MCQs with 25% negative marks, 60 marks is the passing criteria. And after single attempt, you have to wait for odd months, right? So 2 months is a kind of discouraging. Most of the members tell me this, but yes, this is it, and we have to bear with it, right? So this is the majorly the course structure about you have how you have to pursue for this particular course. When it comes to the materials and all that kind of questions, institute or the RVO under which I was discussing with the ICAI RVO, the ICAI RVO provides the detailed material for you to study for this particular course. Available with the respective arms. Right? For physical trainings, you can have discussions with the maybe Sonali ma'am or Asana. For virtual, that is always available online, right? And after that, after you pass this exam, you have to, just like the ICA membership, you have to pay the membership fees, right? And you can register yourself on the, and your name will be displayed under the IBBI's website under the name of registered valuers for securities and financial assets, right? So this was the major point about the course content, right? If any of your queries will be there, if any of the questions will be there based on this, you can share your questions, and in the end 10-15 minutes or third time will be left. I'm definitely going to take up those questions, right? And would try to give you the answers based on best of the knowledge, right? So now after this, after about the course content, right? So next, the question that comes to our mind, the next point that I'm going to touch upon is valuation as a profession. worth it or not? If the members sitting in front of me are the members who are looking forward to pursue this particular course, right? And they are the best and the most important question that is always in their mind. Sir, we can invest our time. We can invest our, obviously, for investing the time, the money, the efforts for this particular exam, we have to sacrifice sometimes our clients also, sometimes our family also, sometimes we have to obviously manage for studies, right? And we all are professional members. So if we sacrifice that many things, will that be that much worthwhile or not? क्या उससे उतना बेनिफिट भी हम ले पाएंगे या नहीं, और इतना इस प्रोफेशन की वर्थ है या नहीं, राइट? एज स्टूडेंट वी ऑलवेज नो द मीनिंग ऑफ वर्थ एंड वैल्यू, राइट? So let me tell you clearly, if you are looking forward for a profession that is a kind of future profession, right? Not the past, but the future profession, then this is the one, right? Because as per the introduction of India essays, and as I have started with the session, as per the introduction of Companies Act provisions, many of the places, the valuations are required, right? And a valuer, even in the under, you most of you must have heard, under the IBC also, Insolvency and Bankruptcy Code, there are the requirements of registered valuers. Quickly you have to, after appointment of resolution professional, you have to appoint the 2 registered valuers, right, within 7 days maybe, right? So the valuers requirements are always there. And at this point of time, as I have already told you, there are more than 350,000 chartered accountants. There are only 2,000 or 2,200 registered valuers in India, right? So the future is lying with this kind of profession. If you want to diversify your field of working, if you are working in the traditional fields and want to improve, want to diversify your work, then obviously this is a profession for you, right? And if you can invest time for this profession, there are many members, as I can tell you with my experience, who are working great with this. After passing this exam, they are doing really, really good with or under this profession, right? And your time investment will always be a worth. Let me tell you, right? Straightforward, yes, right? If you can invest your time, you are definitely going to get exact worth in the monetary as well as satisfactory kind of work, and a different kind of work, obviously, because sometimes the I don't know whether I should say this or not, but sometimes the traditional works like accounting and all, or even we always listen that the bank audits and all are definitely, with the passage of time, they are going to vanish, right? And for that purpose, if you want to improve yourself, even this time, I think 70% was there with respect to the bank audits. So obviously, they are decreasing the limits, or some kind of traditional practices are a kind of monotonous practices. So valuation for those persons is obviously a to-go kind of field, right? Because every valuation is going to give you a spark, is going to give you a kick, is going to give you a different type of atmosphere, different type of techniques that you have to apply. In the next 1 hour, I'm going to cover the different techniques of valuations also, right? And those techniques and everything are applied differently with each and every kind of valuation, right? So for that purpose, obviously we have to look forward, or we should look forward for this profession, right? Now, after this basic and very important question, I hope I have answered. If still you want to ask any specific query about this profession, that how you should go ahead, how much is the fee structures that valuers are charging, or sometimes something like that, the personal kind of questions, please share that question with Astha ma'am. She will definitely take up with me, and I would love to answer those questions after discussion with the Hansraj sir or Preeti ma'am, right? Now, next question is, how much efforts? Last and final question, then we will start with the valuation kind of things and approaches of valuations, right? How much efforts will be required to become a valuer? straight question, straight answer. 100 hours, quality 100 hours. Quality 100 hours of your time, if you can invest for this profession. Now that 100 hours, maybe 4 hours a day in 25 days, 2 hours a day, 50 days, 1 hour a day, 100 days, right? But this much time would be required these days to become a registered valuer if you are having specific required and to the point materials, right? Then 100 hours would be more than sufficient as far as I'm having the experience about this course of so many members, right? So this much time, if you want to invest or if you can invest out of your busy schedules, then this is the future profession that you must take up. Then you must take up, and if you can invest this much time, it would not be this. This is not going to trouble you at all, right? Next. Now I'm going to discuss about the some small points about the requirements and the things that must be there that is required for the valuers and all. And then after that, I'm going to start with the valuations, that how majorly the valuations are done in this particular profession, because this is not in this particular session I'm not going to cover the entire things, but this is obviously, as Hansraj Chugh sir and Preeti ma'am have clarified you all, that this is a series, right? So Valuation Manthan is a kind of series. Then in this series, we will cover each and everything in a step-by-step mode for the help of the members who are pursuing this course or who have already qualified as a value, right? So now there are small points that I'll quickly touch upon in the next 5 minutes, and then after 11, we are going to start with the valuation approaches and valuation techniques kind of points, right? So this is the provision, as I have already told you, majorly these are the points that to become a valuer, this major and small points should you have to take care. Applicability rate, applicable eligibilities for individuals. These are the normal members of RVU, and RVU must recommend his name also. Screen is visible, hopefully.
Yes, sir, it is visible.
And the person must have passed the examination required for the same, that is the IBBI or NISM examination that I have told you. After passing the examination, you must get yourself enrolled with the IBBI within 3 years, right? After that, again, you have to pass the exam. It is not like that again and again after every 3 years you have to pass the exam. Don't worry about that. But yes, let's suppose you have passed the exam today. Today is 2nd of April 2023, right? Then before 1st of April 2026, you must be enrolled with the IBBI. Or vice versa, if I have to tell you, whenever you are going to going for enrollment with the IBBI as a registered valuer, the exam, the requisite examination must have passed at least 3 years back, right? At least 3 years back. And third is, well, that's the qualification and experience that we have already discussed, the 3 years for CACS and ICMA that we have to complete, and the major basic requirements that should not be a minor, unsound mind, undischarged bankrupt person outside India, and not convicted for by the court for 6 months or more. Treatment of 5 years are not finished. After 5 years, he can be a registered valuer. And penalty levied under 271J, and appeal time has over under Income Tax Act, and he is a fit and proper person. These are the basic requirements to become a registered. There is some voice disturbance. If you right. So he should be a fit and proper person with respect to the integrity, reputation, and character, and absence of conviction and restraint order, and competence and financial solvency should always be there. Then there are entire procedures are given under these rules that you have to follow. If you pass the exam, then what is the procedure needs to be followed for becoming an RV? If there will be any technical difficulty will be there, and then how that is going to be solved, that is covered in detail under these rules, right? So before I will, if the time will permit, I will cover these provisions with you in detail also before, but before these provisions, for all the members who are new to this profession, I'm going to start with the type of valuations, where are the valuations required, right? Which are the points where the importance of valuers will be there, right? And what are the issues that we have to take up under Companies Act for valuations for registered value, and how we have to go for that kind of valuations in a practical scenario or with respect to the exam purpose also, right? And the kind of case studies which are going to be asked, I will slightly discuss those case studies with you also, or not the calculations. I will not be able to do this in this hour, but in the next series, we will definitely discuss the case studies also, right? But under the Companies Act, if I have to tell you the basic points where the valuations will be required, right? There are the allotment of securities for considerations other than cash, for exit of dissenting shareholders for transfer of company, the preferential allotment of shares for the investors or the equity holders, right? There are issue of sweat equity shares in case of unlisted companies. Sweat equity shares means the ESOP kind of shares you have to give for unlisted companies, right? Issue of shares or convertible securities on preferential basis, as I have already told you. Purchase of minority shareholdings, then the fair valuations will be required, right? Under IRP, IBC code, the valuations will be required, right? The SEBI regulations, LODR, ESOP regulations, the valuations will be required. Under Income Tax Act, Rule 11 UA, read with 56 to 10, the gifting kind of situations, right? If you are going to gift some shares to some persons and all, or otherwise the valuations are required, right? The section 28 6A, the section 56 to 10, 56 50 CA, right? Slum sales and all situations, the valuations will be required, right? So these kind of situations, many areas of working are there right now, and many areas are emerging. At this point of time, the requirement, once the RBI or FEMA, under FEMA or under RBI, if RBI will mandate to the banks or registered valuers reports in maybe the upcoming time, then also that will be a very vast area for the professional members to work under this profession, right? So now, if you think of pursuing this profession, then you can go with the flow that we have just discussed, and after doing the trainings and all, you can be a registered valuer. And if you will be a registered valuer, how and what kind of valuation approaches and what kind of the professional code of conduct that you have to do, that we have to look forward, and what kind of valuation approaches should be or are there, we are going to study about those kind of approaches now. Number one, when we say about valuation, now let's suppose there is a person who is working for a company and who is doing or is giving his services to the company. Based on his services, the company is able to earn some profits. Now, in this situation, does that company, if the company think that there is a value, is there a value of that employee for the company? The answer is yes. But how much is the value that we have to find out, right? This kind of situation, what should be the valuation approaches we have to follow, right? Secondly, there are machines who are also working for the company. Obviously, they are making the materials or helping for providing the services and all. They are not living things, but they are also giving the services for the company. And based on that, we are generating some value for the company. Valuation of that is also important. Different kind of approach may be required. Now, all of these employees plus the machines or living or non-living, all are doing the things, and they are as a whole, they are creating a specific value for the entire stakeholders, right? Now, if I am a person sitting outside the company and thinking about the investment or purchasing the equity shares of that company, right, then I am not concerned about the one machine value or the one person's value or something like that. I am concerned about the value of that business as a whole, right? So then the valuation approach is going to be totally different. Now, when this employee example I have given you, if you ask the mother of that employee that what is the value of your son, the mother will definitely tell you that he is priceless, he is top of this world, millions, billions, trillions. Whereas whenever you ask the value of that employee to his boss, he will tell you that the worth of this employee is zero. He does nothing for the company. Okay? And just on a lighter note, but yes, this the thing that I want to tell you over here is the perception, the based on the perception, the mother's perception is different, the employer's perception is different, right? And based on the perceptions, even the same person or same asset is going to be valued. The valuations can be totally different. And for that reason, the kind of standardization or kind of similar kind of provisions that needs to be applied, that should be there, right? But still, even if you when this even when the valuation thing is there, even many of the standards, many of the things can be there. Still, the professional wisdom is the most important thing that will be required by the valuers. And for that purpose, we are sitting here to acquire those skills, those points which are followed by most of the person. Right? Because whenever you have to give a value, you first of all, as a professional valuer, you must be satisfied that yes, whatever the assumptions, whatever the presumptions for the future, whatever the expectations for the future that you are thinking of are actually viable or not. And you, if you are first satisfied with that, then only you should go ahead with that kind of valuation reports, right? Because most of the time, if the assumptions are not correct and a kind of valuation report is given, then that valuations are not accepted by the society as a whole, right? And this kind of situations are sometimes there with respect to the startup valuation, because it is very difficult to value a startup, because startups are going like this, they are always in losses, right? Even the biggest company like Alphabet or Google, you know easily, even the Google once was very in great losses in initial times, right? But then suddenly they have grown up. So for a valuer, it is not that easy. Even if you are giving a high valuation, you should be personally, with your professional wisdom, you must be satisfied enough for before choosing the approach for valuation, before choosing the parameters, before choosing the similar company valuations kind of thing and all, right? So for that purpose, in this series of this valuation manthan, over the time, we will, or the institute will try to help you to figure out the most accepted practices. But still, you as a valuer are always open to look forward for each and every case, each and every value, or each and every situation as a different one. You're totally open for that, and accordingly you have to give your valuation report. These processes, these standards are there to guide you with that, right? So now, under the standards or otherwise, what kind of valuation approaches are there? What kind of valuation approaches are there which are widely used, right? So there are majorly three approaches. Which approach out of these three approaches you have to choose, that I'll tell you based on the what are the guidances based available over there, right? First kind of approach is called cost approach. The second kind of approach is called income approach. The third kind of approach is called as market approach, right? Very basic terms. most of you during your professional qualifications or otherwise must have gone through these terminologies. I don't think that cost or income or market value is a or market approach, maybe a kind of new term to you. That is not at all. What is the aim or what as a crux item, if I have to tell you, is there with respect to these kind of approaches, and what should be the criteria, what should be the points, what should be the issues that you should keep in your mind before selecting the approach for the valuation. That is important, right? Let me ask you one question, basic question. You can, even if you cannot answer me, but you can think that answer in your mind. Let's suppose this is the phone that I am having, right? Asset, obviously. If I have to value this particular phone, if I have to value this particular phone, or if I ask you that what should be the value of this particular phone according to you, and we have to find out the value, then how you have to, how you will perceive, right? That basic things you will ask me. First of all, the first question that obviously you are going to ask me, sir, what is the model number of this phone, in which year you have purchased, what is the like RAM size, or the, what do you say, the hard disk data size or something, right? Which is the Android version or iOS version. This is under operating, right? Whether the new models have already come in the market for this or not, right? So what is all things you are asking? This is called pre-preparation before the valuation, that you have to always do. The exercise, right? The nature of the business. If I have to discuss the same phone example with the practical kind of valuation, the business that you're going to value, what is the nature of that business, what is the size of that enterprise, what is the history of that company, when was this established, over the year how was the trend, over there how many products this is offering, right? What is the capital structure it is having, right? The intangible valuation, intangible assets, how much intangible or tangible assets it is operating, right? What is the value of this company as per the book value? So these kind of preparations are always done before selecting or before going for the for this kind of valuation, right? Now let's suppose you have asked me these questions and I have given you the answers, that this is this particular model, this much is the RAM, in this year I have purchased, this much I have used, and this new model I have already come up with, right? All these things I have told you. Now what you will do, you have to find out the price of this food, what you can do, and how is the worth or the value of this phone can be calculated. Number one, you will say that, sir, we will go to the market, right? And we will try to find out that in the market, if a person is ready to buy this phone from us with the same description, right, how much amount he will be ready to pay, right? So that is the first way of obviously asking, and first way of calculations, right? If you go market, that person says that yes, I will purchase this phone for, let's suppose, 20,000 rupees, right? So the value of this phone for you is approximately 20,000 in first one of the approaches, that you are going to sell this phone in the market, and then how much you are going to get against it. That is one of the approach, one of the way. Second way can be, if this is only the approaches that you have to keep in mind. Second way of discussion is, second way of calculating the value, that's the no one is ready to purchase this phone from us. But yes, then the second approach may be that if I have to replace this phone with the similar phone, that if I go to the market and tell them that this kind of phone, this much old, this version, this model, this much is the RAM, 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 right? So that will be the amount that you will be ready to pay for the replacement, for the replacement, for the replacement of this particular phone with the newer or new particular model of similar nature, right? So this kind of phones are, or this kind of amount can be available, and this is called as replacement cost methods, right? So earlier it was the normally selling method, or the technical names of these methods I'll discuss. But before that, you must be having open up your mind that how you have to pursue for the valuation. Number one is, if you are going to sell, then how much amount you can fetch, or if you're going to purchase or you want to replace this particular phone, how much amount you have to pay. That can be also a way of thinking, right? Next, obviously, sir, by selling or by replacing, we have got the idea. But in businesses, generally, the assets are not purchased for selling them. I'm not telling about or saying about the inventory. Inventories are made or purchased. If you're a trader, then obviously you are purchasing those inventories for selling them. I am discussing about the fixed kind of assets or property, plant and equipments, or employee kind of assets, right? So those kind of assets are not acquired by the business in the normal sense for generating profit or generating revenue by selling them, right? Those kind of assets, let's suppose if a machine company is having a machine or purchased a machine, and by selling that you can get some 5 crore rupees, right? But that machine you have purchased for making or processing the raw materials into the finished goods, right? And then you are going to sell that finished goods, and this machine can be used for 20 odd years. This can make a finished goods maybe worth of crores or many crores, right? Then will you say that the worth of this machine is only 5 crore, that for which you have purchased? The answer is the no, right? So in these kind of situations, you have to change your methodology. You have to completely change your approach. Wherever the assets or the businesses are there, the thinking process of that is going concern, right? What is going concern? That you believe that the business or this asset will keep on going forever with us. When the approach is that, when the thinking is that, right? When you are thinking that I am going to sell this, right? That means you are closing down the business. Then the approach is not going concern. But if the approach is going concern, then you have to think differently, right? Then for calculation of the value for that asset, or assigning the value for that asset, you must have to change your approaches to the income approaches sometimes. Now, what is this income approach? Let's suppose, as all of you, most of the work is these days is done through the phone. Let's suppose I use this particular phone for all of my professional work, and just for a hypothetical situation, right? If my phone will not be with me, I might not be able to earn that revenue that right now I'm earning. Right? This is that key asset, that if this phone, or especially this phone, will not be with me, I might not be able to do all my work, and I will not be able to collect the revenue that I am right now generating, right? So in this particular phone, earlier by selling it, I can generate only 20,000, but by using this phone, the term is used, right? By using this phone, I can generate a revenue of, let's suppose, 50 lakhs in 1 year, and this phone can be used for 3 odd years, right? So in that situation, will you tell me that the worth of this phone is only 20,000? The answer is generally a no. And that is why this can generate a revenue for me for maybe 1.5 crore, right? So I'm not saying that the value is exactly that, but approach must be different, right? So 20,000 and 1.5 crore. Obviously, the selection of the method for valuation is a most crucial step. If you have selected the method for valuation, the half of the job is done. Most of the time, the importance of this step is not understood properly, right? So that is why I'm keeping this particular point that much stressed upon, that yes, selection of method decides or is a decisive factor for correct valuations, right? So in this kind of situation, this kind of approach that we say that if we will use this asset, how much if we use this asset, how much revenues we will generate over the next years. right? How much revenues you will generate over the next year, and based on that revenues, I'm not saying what method you are going to follow, but that you will study in the next series or maybe today if the time will permit, right? But based on that incomes that this particular asset, this particular business, this particular human being, whatever the income, whatever the benefit that can generate for us, based on that incomes or the benefits, you are trying to value the business and or the asset. That kind of approaches are called income approaches. Those kind of approaches are called income approaches. Under income approaches, that is going to be used, right? Or this is how the valuations are going to be done. There are many approaches which are used under for income approaches. The first and most common approach is called discounted cash flow technique. Most of you must have seen the discounted or done maybe in practical life also, discounted cash flow technique, right? So this, there is a I think on your screen, I'm going to share. This is one of the this is one of the valuation report on Adani Enterprises, right? So recently, this is the hot key topic. So this is the valuation report based on the approach of there is discounted cash flow technique, that is FCFE, FCFF approach is being followed, right? The terminal value, the present value, then the adjustments are there, and based on that, they have calculated the price of the Adani stock as 947. The fair value should be 947, whereas these days the share is traded at 1700. Right? So the fair value should be this as per this valuation report. I'm not going to endorse this valuation report to you at all. Right? That your wisdom should be acquired. But this is one of the valuation report on Adani Enterprises recently published in February 23. Right? After this Hindenburg report and this whatever we can say, that Hindenburg report was published openly. After that, this valuation was done by one of the most renowned valuer, and this is the valuation report in which the present value or the discounted cash flow is followed, right? So this is based on the income approach, right? So this is based on the income approach valuations. This is the detailed case study on this Hindenburg report or otherwise, but I'm not going to discuss that. But yes, you must have got the basic idea that under the income approaches, you always try to find out that in the upcoming years, how much income this business or this asset is going to generate. And based on the inflows or the incomes, you are going to calculate the present valuations or present values, and that is called the discounted cash flow techniques. In the option valuations, you always use the Black-Scholes and Merton model. In the sweat equity shares valuations or the ESOP valuations, you always use the Black-Scholes and Merton models. Those are all the income approach models, because under those models also, technically, we always strive for the benefits, the incomes that I can generate by using this particular option for me based on my assumptions, right? So all those models, the Black-Scholes Merton model, the this FCFE approaches, the normal discounted cash flow approach, and all these all are income approaches, right? The first one was replacement cost or cost approach, right? In which we always try to sell the asset, and that is the approach. Let's suppose sell it, or let's suppose replace it with a similar kind of asset. How much will be the value of that, right? Second level, the income approaches, right? So for income approaches, you always strive for the benefits out of this that you can take up and you can generate over the time, and based on those benefits, you always try to calculate the value of the particular business or particular asset, right? So based on those benefits, and that is why this becomes a subjective matter, right? Because the benefits if you have to look forward for the future, obviously the past benefits will not be any helpful, right? You have to look forward the future, that in the future, how much benefits this asset or this business can bring up, right? And future is always uncertain. For that, the assumptions and presumptions are required. And that is why when I started discussion of these valuation approaches, I told you that these valuation standards and the series of these kind of discussions can give you an idea about how you have to go. But yes, your professional wisdom will be the most important thing that will be required, because every assumption or presumption with respect to any particular business can always be different, right? Now, moving ahead to the third kind of approach, after income, after cost, after income. The third kind of approach is called market approach. Now, what is this market approach? Market approach is a kind of approach mostly used, right, and one of the most accepted way of valuation or valuing a particular entity. This approach believes that the investors in this world, or the persons outside the purview of the entity, or persons outside the purview of the valuers even, the market forces or the investors are the most intelligent persons and the most knowledgeable persons. They are ready, they are willing, if they are willing to invest in a particular company on a particular price, then that must be the value of that company. Just 5 minutes back, I have given you the example of, or shown you on the screen, the valuation report of, or one part of the valuation report of Adani Enterprises, which shows the fair value based on the discounted cash flow technique or income approach as 947, right? Whereas I was the same person who told you that this share is actually being traded at 1731 rupees or 1700. Let's suppose, let's take a figure of 1700. As per the valuation approaches, one valuation of income approach that we have applied, the valuation we have got as 947. Whereas market forces or the investors are ready to buy this particular share for 1700 rupees. Now, in this situation, as per the market value or market approach, the value should be 1700, because the investors, the persons, the market as a whole, not as a single person, everyone is ready to purchase that share for 1700 rupees. So why we should say that the value is only 900 rupees, right? As per one of the approach, we can say that. But as per the other approach, that is a market approach or market valuations, the value is 1700 rupees. Next example. Whereas sometimes what happens, my company is doing, let's suppose, a business. Let's take this example in a slightly detailed manner. Let's suppose my company is doing business worth rupees, sales, let's suppose, worth of 500 crores. Right? There is another company named ABC Limited. That company is doing a sale of 5,000 crores. Right? The revenue of that is 5,000 crores. The value of this company is, as per the market approach or accepted valuation as per the market approach, this is its share is traded in the market, right? And as per the traded value, the market valuation of this company is 10,000 crores. That is 2x to the sales, right? It is going on as the value or market value of this particular company, right? My company XYZ Limited, for which I am going to get a value or calculate a value, right? This company and XYZ company are doing the similar kind of operations, similar kind of business they both are dealing, right? Now, in this situation, based on the income approach, I can get the value. Based on the cost approach, I can get the value. But this company is a company which is having a comparable kind of business, right? Similar kind of business of XYZ and ABC is there, and in that business, but its shares are traded, my shares are not traded. My shares are not traded. So I cannot get the market value of my shares, right? But the businesses other than that are totally same. So there is a difference of volume. Yes, that is there. For that, we need to make the adjustment that I'll discuss in maybe in 2 minutes, right? But before that, for understanding of the market valuations or market approaches, it is not that only the market price of the traded securities are there that can be taken, right? The market approaches can be applied in this manner also. My company is not traded at all, but a similar company is traded and its value is twice of its sales, right? Its value is twice of its sales. Then how I can get my valuation based on this? This type of methods are called comparable pricing method or comparable transaction methods and all, but you are going to compare the two entities, right? And in this situation, what should be my value in a broader sense? The 2x of this is 1,000 crores. But now, obviously, some adjustments should be there. When you study these approaches in detail, then you study the adjustments in detail. There must be the discount due to lack of marketability, because these shares are marketable, my shares are not marketable, right? So I must discount the value, I must reduce the value. Even in this report, if I show you, there is a value, if you can see on my screen. Here, there is a factor applied, adjustment for distress, that the Adani Enterprises is having a lots of debts. If you have gone through this company's profile, right, that they are having lots of debts, right? So if they are having lots of debt, there is always a possibility of failure. Whereas the other comparable companies might not, for which the data has been taken, they might not have that many debts. So there is a requirement of adjustment, right? So this is the adjustment for distress that has been done, right, in this particular valuation report also, right? So this is what I was supposed to tell. That I was telling you that in this kind of situation, the adjustments, that shares were traded frequently in the market, right? So having a great leverage, giving a great leverage to the investors, right? If I ask you, let's suppose you go to the market for purchasing of AC, the summers are about to come, right? So if you are going there to purchase an AC, there are two ACs that the shop owner have displayed. The same model number, the same size, tonnage capacity, model, make, year, everything is same, right? But when you ask that person, ask the shopkeeper that what is the difference between the two, the shopkeeper told you that the first AC, that the AC number 1 is there and AC number 2 is there. The first AC can be used only continuously for 4 hours, right? Then it must be rested upon. It must be shut down for another 4 hours, right? And then after that, you can use it for 4 hours. Then you have to shut down for 4 hours and all. There is a requirement because it heats up easily, right? Whereas with the second kind of AC, the similar one, but in that, the requirement of this shutting down and all is not there. The shopkeeper tells you that you can keep on using this for the entire summer, 4 months continuously. No need to shut it down at all, right? It can be worked for continuously for that much time, right? So in this situation, if as a normal investor, right? If as a normal investor, if I have to ask you for which AC you will be ready to pay slightly higher amount and for which AC you will be paying lesser amount. Obviously, sir, we will be ready to pay higher amount for this and a lower amount for this, right? Because if there are some restrictions, if there is some restrictions applied upon me, we will be ready to pay some lesser amount for that, right? So here, is there anything you have to ask, Arthami? Sorry. if we have to value a particular thing, if I have to value these two ACs, obviously the value of the second one will be slightly higher. And if you are using the value of this, and in this AC certain restrictions are there, the adjustments for those kind of restrictions must be adjusted. And that is what I was telling you here. That is what I was telling you here, that if one company shares are traded in the market, the similar company, but we are using the data of that for my company and which is not traded at all, then the my shares are not marketable. Then in that 1,000 crores of valuation, which is the comparable valuations based on the market prices, we need to adjust. We need to make some adjustments, and that type of adjustments are called discounts due to lack of marketability, or discount due to lack of control, that discount due to distress. Just in the Adani enterprise we have seen, right? If there is a chances of financial distress in our company, then also the adjustments must be made even in the valuations always, right? So these type of adjustments must be done if you are using the comparable companies data, right? So there are methods for calculation of discount due to lack of marketability. Three methods are there. Discount due to lack of control. There are methods. Lack of control, if you are acquiring the controlling interest, or if you are acquiring only small portion of the valuation of shares, then accordingly the DLOG or DLOMs must be adjusted. But here I am not discussing that in detail, but I was making you all aware that how you have to think, right? So market value approaches are most accepted approaches for valuation purpose, because we always believe that investor is a knowledgeable person, right? If the investors as a whole are investing in a particular company at a particular price, they are ready to invest for, then that is the worth. Because most of the time, even the incomes, even the otherwise, the valuations or the investors are ready to pay more. Sometimes they are ready to pay less, right? So these type of approaches, three major kind of thinking processes. I'll not say approaches, but thinking processes you have to follow, and accordingly you have to select the method for the valuation of that particular entity. The first initial, quickly if I have to revise, before selection of the approach, you must have to do your pre-planning. What are those pre-planning includes? Obviously, what is the size of the business, right? What is the nature of the business, since how many years the business is working, right? What is the past record of the business, right? What is the future aspirations of the business? What is the current changes that they have made? What is the obsolescence kind of technology? What is the intangible assets they are using or they have developed, they are developing, right? So those kind of all kind of changes and everything is required, right? So those things must be done first, and then accordingly, let's suppose the business when the what should be the right way for selection of approaches. Number one, if the market approaches can be used, the data you are having, the similar kind of companies you are having for comparable information, right? Then the most accepted approach that should be followed, most guided, I should say, right, as per the standards, is market approach, right? Second, and again I'm saying this particular line, that the points which we are saying or we are discussing are the guiding kind of things, right? As per the situation or as per the requirement of the business, you can choose the approach as per your wisdom, right? But the prima facie, if generally the information about the market valuations, the comparable informations are available, then the first preference should always be given, to the market data, the investors as a whole, what they are thinking for this particular valuation, right? If that information is not available, or that kind of data is not a very, what you can say, you are not properly satisfied that this exact entity can replicate to my entity and this data can be used. For example, let me give an example. The startup valuation. Now, for example, the startup valuation is generally the exact similar kind of companies, it is very difficult task to find out the exact similar company, because each startup is having a different kind of idea. Most of the times they are having, let's suppose, an app is there, they are developing an app that is solving a particular problem, right? So that type of problems or that type of apps, it is not required, it is not mandatory that that kind of apps must always be there. Similar apps will be there, similar level of business will be there and all. So for that purpose, obviously, if the businesses are standardized businesses, then the comparable entities can be there. But if the startups are there, if a unique kind of business, monopolistic kind of business is there, then it will be very difficult for you to find out the comparable companies. Then you can go for the income approach or the cost approach. Even in that, the first preference should be given to income approaches, and where the income and cost approach should be used if the going concern is on stake, or income approach is not at all viable. It is not possible to apply the income approach, or the assumptions that are going to take are very vague, right? In that situation, you can or you should go for the cost approach. Otherwise, generally, for the valuations, the cost approach is the least accepted approach. Either it should be market approach or it should be the income approach. And that is why even I can see that most of the professionals are sitting here. Most of the valuation reports that you must have seen are based on discounted cash flow techniques or the comparable multiple techniques, like that's just the multiple example that we have done, that with the sales multiple twice or enterprise valuation multiple of 5, 3 and all is done. That kind of situations are there, right? So this kind of situations are discussed under this. And this is one screen I'm going to share with you. This is called the market approaches, right? These kind of comparable entities, comparable data is always taken off. That this is the enterprise value to EBITDA multiple. This Adani of enterprise only 2002 to 2015, it was only 17.31 times, right? With respect to EBITDA, the 17 times was the enterprise value of Adani, right? At 2021 to latest, it is 52.59. Right? So it has increased maybe 3 times, right? So it has increased a lot. The PE multiple, price to earning, right? EPS, how many times your market value is there with respect to the earning per share, right? So earlier it was in the year 2002 to 2015, for that many years, right? It was averagely 34.52. Now it is 214.45. Right? Price to earning multiple. The third is EV, enterprise value to sales. How many times? This is 2.71, right? So this is the basic approaches, or these are the information regarding the market approaches, right? Market approaches or comparable methods. Right? Now, if a company who is doing the similar kind of infrastructure business of Adani Enterprise, similar to Adani Enterprise, and he wants to value, that company wants to value the that particular company based on these data, then the kind of adjustments must be made in your valuation if there is any changes with the Adani and your infrastructure company, right? So that type of adjustments made, then the valuation is based on the market value approaches or the income approaches or the cost approaches, right? So based on this, I hope I have made my point clear with respect to the types of approaches, the valuation approaches, right? The why this is very important, because based on the cost approach, if you get a value of 20,000 for this particular phone, based on the market approach, you might get a value of 1.5 crores, right? As per my example that I have given. So or vice versa. So the variations are huge based on the approaches. So selection based on the information available. If so let's suppose the data you are having, every data you are having, right? then which approach should be followed? First priority should be given to the market value, right? The second priority should be given to the income approaches. The third and last priority should be given to the cost approaches, because costs are always useful when the going concern is on stake, or when you are actually going to sell this business or going to generate the inflow or benefit for the entity by selling these assets, which is not the case in most of the situations, because the business owners never purchase the assets for selling, right? So based on that, but valuations sometimes are done under cost approach. You can say the net asset method approach is always followed, or the under income discounted cash flow technique, or for evaluation of sweat equity shares, the or the ESOPs, the Black Scholes, Merton models, etc., are also going to be used, right? So this kind of points are there, right? And based on these approaches, the technically entire valuations are done. The small points, the issues, the methods under these approaches are different methodologies are there. The in-depth study of that is required. But if I have to tell you the crux of the entire valuations, then these three thinking process, I'll not say approaches, because there are similar small points will always be there, but the three thinking processes you have to keep in your mind, right? And based on that only you will be able to get the exact value, right? So now to go ahead, now we have around 10 minutes before we can go for the question answer round, or maybe 7-8 minutes. I'll quickly brief you out about the issues, right, with respect to the and I'm not touching upon the RV rules in detail, right? If required, I will share the link of a presentation where all the information is easily accessible and available, right? This with respect to these RV. Is there anything, ma'am, you want to discuss?
No, sir. Please
So
continue.
there are 2-3 points that I wish to tell you before we can go ahead. This is a presentation. I will share the link with the ma'am so that it can be shared with the members also if possible, right? So this is a RV presentation based on RV rules 2017, right? Under this presentation, you will get each and every detail. What is the requirements of to becoming? What are the key requirements? Then who cannot be who for a partnership firm? What are the requirements? The persons who will be the qualification. What is the qualification and experience that is required? That is also given here in detail, right? The valuation, examination, information, syllabus, and all. Everything is written in. Then if you become the if you pass the exam, then what is the fees, how many days, how you have to apply, what is the requirements, then everything is written in this particular presentation. You can just go through this, right? If you have to surrender and all, that is a later stage kind of thing, right? And this is the basically applicability date that we have already discussed. So this presentation I am going to share with you all, in which you can simply clicking on that each and every point, you can get the information of the entire provisions related to RV, RVO rules, valuation standards, and miscellaneous points also. जो इसके मिलते जुलते small points हैं, all the information will be available in this small slide, right? So if we will discuss in the next session, maybe some other faculty may be there, or I should also be there, then we will touch upon all these points in detail, and also these kind of reports, right? How these kind of reports are actually prepared. What is the pre-planning in this? What is the how these discounted cash flow techniques? What are the pre-planning information that we have to gather upon, right? All these things will be also discussed in the upcoming sessions of this valuation month, right? So just be with us, be with the institute, and you will be easily able to, if you have to still give your exam, then also, or if you have to, if you are already passed and want to learn the valuations in detail, then also this will be a helpful thing, right? For last 2 to 3 minutes, I'm going to discuss with you for this last part is for the aspirants who are going to appear for the exam, the kind of case studies, because this was one of the topic assigned to me for today's session, that the case studies, what kind of case studies they are going to ask you in the exam. For practical kind of case studies, the Adani or other these kind of big evaluation reports, we are going to discuss with you all in the series to come. But today, I'm discussing with the respect to the exam, what kind of majorly case studies they're asking. They're asking you the option valuations, they're asking you the equity valuations, they're asking you the Ind-AS valuations also. Earlier, when even I started helping the members for this particular course, I started teaching to this particular course, then also there were only 5 to 6 case studies were there. At this point of time, there are more than 100, right? So in those case studies, the IBPI is looking forward for every kind of valuation knowledge you must possess before you should pass the exam, right? They expect from you the valuation of convertible preference shares. They expect the valuation of buildings and not exactly the buildings, but as for the India's 113, the assets valuation, which should be the method you should use, right? That kind of thing. They're asking you the valuation of American options. They're asking the valuation of European options and all, right? And apart from that, the equity and bonds valuations kind of case studies or capital vesting case studies are always there, right? So these are the major areas. If any of you need any sort of case studies and all, then obviously you can contact me or contact Sonali ma'am. Maybe she can forward me the issues. If you need any materials, helping materials for passing this exam, then I'm also here, also there for you all. If you need any kind of guidance apart from this, then also, if possible, if it is allowed on institute's behalf, then Sonali ma'am or I request Asta ma'am, then you can share my contact number also, that is available on WhatsApp, not on calls. And you can ask me anytime, anything with respect to this course, because the member who is, let's suppose if a person is a registered valuer, if that person is having an experience of himself, then I can give you the experience of more than 704 members who have already qualified this exam. We all have worked hard for this, and for you all, that all things, that the experience of all those members in a summarized way will be available on one single call. Right? So you can ask me anytime, anything with respect to this course or any of the issues that I have touched upon. If any thing that I have missed or something, we can discuss in the next session. Now I request Astha ma'am to please, if there are any doubts or something, if members have any questions, then I'm.
Yes, sir. Sir, so on behalf of the entire audience, I would like to extend a heartfelt thank you to you for sharing your expertise and experience with us today. I'm sure many of us have gained valuable insights that will aid in our professional journey. And there are a few questions from the members, so I'm asking you one by one.
Sure.
The first question is from Rahul Rajkumar Sahajwani. Can this course be we can do with our job also?
Normally, Rahul sir, this is not, you can obviously pursue the course, right? You can obviously pass the exam. You can, once you have to get yourself enrolled for this profession as a separate profession, then it is not allowed with the job normally, right? Obviously, out of the way, some of the members are doing this with the job. But for if I have to give you a genuine answer, then with job, you cannot pursue this profession, right? Once you pass this exam, then after that you can leave your job if you are getting a good remuneration under this profession. But based on my experience, I can tell you that there are many members after passing this exam is tough, no doubt about that. But after passing this exam, most of the members are getting that many remunerations or in return that even they have left their government jobs, they have left their, because there are members ranging from 23 years to 77 years that I am in touch with these kind of members, right? So there are many members who have even left their jobs after passing this exam just to pursue this, but directly it is not allowed.
One more question is from Vipul Jindal. Benefits of valuer as a chartered accountant.
Benefit of a valuer as a chartered accountant. The chartered accountants by default does the valuations since very long, right? Everyone of you must be aware about this. Even the topics or the financial things that we are going to study in this, apart from some of the theoretical topics that we are going to study in this particular course, we already have studied those things during our professional qualifications in audits, law, and finance. Or Ind AS we have studied in the recent, for the recent member, the old members, they must not have studied the Ind AS or IFRS, but the young members, they have already studied the Ind AS also during their professional qualifications. But as a valuer, this particular degree adds on to your professional qualification, number one. Second, this diversifies your area from the traditional kind of practices. If you are if you want to change your way of practice, or you want to just diversify your field, or you just want to add on a degree that can actually give you some add-on earning also, or as a, what you can say, add on knowledge also, then this is for all the chartered accountants. But yes, you have to spare some quality time to pursue this, and once done, obviously this will be a knowledgeable add-on degree in your portfolio.
Okay. One next question is from Kishore. The question is knowledge of Indies is a prerequisite to succeed as a valuer? What other skills are needed? And he's from Bangalore. He has qualified the IBBI exam, but many big firms have told him that scope is very limited for valuers in Bangalore.
Okay. There are 2-3 questions. Number one question is, can you repeat the first question, ma'am? I forgot the first question. The next I can repeat. What was the first question?
Knowledge of Indies is a prerequisite to succeed as a valuer?
First, I'll tell you this. Whether the knowledge of Ind AS is prerequisite for succeeding in as a valuer. If you have already qualified, let's suppose, the exam, and after that, whether the knowledge of Ind AS will be required, I should say slightly yes. It should not be a prerequisite, but it is important. Why? I'll tell you. If a person is there, is a client, if a person or a client is there who visits you to get a valuation with respect to a particular Ind AS requirement, right? Then as a valuer, obviously it becomes your moral responsibility, as well as you have to study that what is the aim of this valuation, because based on that aim, the valuation approaches may be decided, right? And for decision of that, and based on that aim, the valuation approaches will be decided, and based on that, the valuations should be there, right? So for that purpose, it will definitely add on a huge thing if you can study the Ind AS in detail. But yes, all the Ind AS should not be required. Wherever the valuations are required, those Ind AS you must study. That is my humble submission and my humble suggestion to you, right? That you must study those Ind AS in detail, because in there the requirement, because let's take an example of Ind AS 130. Now, right now I'm not having the slide of that, but if you see the disclosure requirement of Ind AS 113, then there are some points where annual reporting is required. That means every year you have to give that valuation, every year to get that things valued. In some things, only one-time valuation report is required, right? So for that purpose, you must be, if you are not aware that for which point the annual report will be required, for which point the one-time report will be required, it will become really difficult, and that will not give a obviously a good feedback about you for the to the client, right? So it is not a prerequisite, but it is obviously an add-on feature. Second point, second question, ma'am.
What other skills are required?
The valuation skills. If you can follow this entire series that the institute has taken a great initiative with respect to this, because no other RVO as of now I can have the knowledge. They are having the CPR sessions, but they are not having any kind of detailed series like Valuation Manthan we are having, right? So in this, institute is coming up with this great idea, and you should, if you follow this entire series, all the skills that will be required will be discussed in detail in these particular whatever you seminars or sessions or whatever you can say. And next question, ma'am, in this.
Next question is, many big firms have told that scope is very limited for valuers in Bangalore. Is it?
It is not. I'll not agree with this most of the times, because there are very less valuers. But the point over here is that I don't know whether the institute and whether this will be taken on a positive basis or not. But this is the harsh truth at this point of time, that most of the time the detailed understanding of the valuation concept is not there, and that is due to that the quality of the valuation report is not there, right? And due to this, the institute has taken up this initiative to teach and give the training to the valuers also. This series will not be only for the persons who are going to give the exam. This series will be there for the persons who are going to do the valuations. And if you will provide the quality in any kind of valuation or in any kind of profession, if you can provide quality to the clients, quality to the stakeholders for that valuation reports, or otherwise also, the scope is always there. And not only in Bangalore, but even in the tier 2, tier 3 cities also, the requirement of valuers will be there in the days ahead, due to the implementation of Ind ASs, due to the implementation of there are not many companies, but in the tier 2, tier 3 cities, I can expect that in Bangalore there are lots and lots of companies. It is a surprising fact for me that the firms are saying that there is not a big scope for the valuers or the insolvency professionals. But even in the tier 2, tier 3 cities, the work is coming, and only there are 2,000 registered valuers these days, right? Entire work is increasing. Secondly, with the introduction by the RBI and under the FEMA also, they have introduced where the register value will be required in the days ahead, under the banking system also, or the otherwise, maybe the situation will be there, the valuation report from the registered valuers will be required. Right? And then also the work is definitely, even if they are saying right now that is not there, I don't know why they are saying, but even if they are saying in the days ahead, that will not be the case. It is going to be one of the most booming kind of profession in the days. That is why I always say the profession of the future. I hope I have made my point clear. If anything else is required, sir, personally also. Yes, ma'am. Next question.
One more question is, what is greenfield method of income approach?
The greenfield method of income approach is basically used for not for normally, but it is used for the intangible assets valuation, right? It is used for intangible asset valuation. International Valuation Standard 210 prescribes this method, or IVS 302, I say Valuation Standard 302, says about the greenfield. If you recall the time, or if you can think of a village, right? In village, there are fields where the farmers obviously do the crops, right? And if there are like birds and all, they always put some scarecrows here. Let's suppose there is one scarecrow is there. One scarecrow is standing in mid of the field, and every other field is with the grass or the whatever the crop that you have put there. So now you can think the greenfield method like there is a green field and there is one scarecrow. What does that mean, sir? You always, the approach under that is, there is only one asset that you are owning. The business is only having one asset, that is this scarecrow, only one asset. Every other asset is rented or leased from some other persons, from outside persons, right? When you're going to value this asset, you will always assume that you are only having one asset that is owned by the business. Every other asset is taken on lease or rented. What will happen in that case, sir? Let's suppose your business is generating 1 lakh rupees profit, right, as a whole. Entire assets, tangible as well as intangible assets, subject to this intangible asset also, right? These all assets are creating a profit of 1 lakh rupees. Out of that, you will start reducing the rent for all other assets, or lease rent for all other assets, hypothetically, right? For asset A, B, C, some 50,000, some 2,000, 5,000. In the end, if the rent for all other assets is reduced, the last income of 5,000 is left. Which asset, or by using which asset 5,000 income is generated? Obviously, the asset which we are valuing. So then you will use this 5,000 rupees as the income for this asset which are being valued. Now, and then you can calculate the present values, and the value of this intangible asset can be calculated, right? You will reduce the rent for all the tangible as well as the intangible assets. Now, which kind of asset classes or assets these kind of approaches are used? This approach, Greenfield, is used where the intangible asset is the most crucial asset, is the most important asset for the entire business. Let's suppose a company is, there is a company Airtel, right? Now, if the Airtel will not be having the 5G or 4G spectrum, right, then without 4G spectrum or 5G spectrum, maybe the company cannot operate at all. That is the key asset, right, for that particular company. So for that spectrum valuation, we must use the Greenfield approach, right? The spectrum that we are having, everything else we are, if we take on rent, then how much is the income that is left with the spectrum, and accordingly this method is used for under the income approach. This is called the Greenfield approach. For remembering purpose, you can think of a green field in which one scarecrow is there. That is the only one asset that we are having. Next question.
Next question is there any validation period of training of 50 hours? One person has completed the training in June 20. Now he want to appear in the exam. So do we require to do the training again, or
no, June 20, if you have done, you can go for the exam directly. No issues.
Okay. With that, I would like to conclude this webinar, sir. Thank you once again for your time and attention, and all the best for your future endeavors. Goodbye. Have a great day.
Thank you so much, Astha ma'am. Thank you so much, Sonali ma'am, and Hansraj sir, Preeti ma'am, for giving me the opportunity. We'll definitely keep on working. We all actually will keep on working for the betterment of the profession always. Thank you so much.
Thank you, sir.